On July 14th, SK Hynix surged 27% in a single day, closed at $193.92, pushed its market cap past $1.36 trillion. Two direct catalysts triggered this massive green candle. First, Barclays initiated coverage on SK Hynix's ADR with an overweight rating and a $330 price target, implying roughly 70% upside from current levels. Barclays believes the global memory supply crunch will persist for years, with bit demand growth projected at 35% in 2027, far outpacing supply growth of 20%. Second, SK Hynix options began trading on U.S. exchanges on Tuesday, with the most active contract being the $185 strike call option, indicating short-term capital piling into bullish bets. A 27% green candle. Is it a one-off short squeeze bounce or the start of a long-term uptrend? Today, we're analyzing SK Hynix from three angles: candlestick patterns, volume-price relationships, and fundamentals, to see whether a ladder-up structure is emerging. The ladder-up structure is a classic bullish pattern in technical analysis. It follows a rhythm: advance, consolidate, advance again, consolidate again. Each consolidation zone becomes a support platform for the next leg up. Key characteristics include: each advance comes on rising volume. Consolidation happens on shrinking volume. Pullbacks don't break the prior platform high. The pattern shows higher lows plus higher highs. Right now, SK Hynix is in the phase where the foundation of a ladder up is being laid, but the first floor isn't finished yet. This candle has three defining features. First, an extremely long body. From the open at roughly $149 to the close at $193.92, the body spans nearly $45. That means buyers drove prices higher from the open all the way to the close. Bulls were in absolute control the entire session. Second, a very short upper wick. The high hit roughly $200, but the close was $193.92, an upper wick of only about $6. That tells us that while overhead resistance exists, sellers were easily absorbed by buying pressure. Third, heavy volume. Volume expanded significantly. This isn't a low volume hollow rally. Real money was coming in. A single high-volume green candle clearing all near-term moving averages. That's the classic first step signal in a ladder-up structure. The closing price of $193.92 is now above all short-term moving averages. What does that mean? Before the breakout, these moving averages acted as resistance. Every bounce attempt got rejected near them. After the breakout, they flipped to support. On any future pullback, MA5 and MA10 become the first line of defense. This is a critical step. The trend is shifting from bearish dominance to bullish control. All three KDJ lines are in the low territory, below 30, with the J line at 24.15 about to turn upward from oversold levels. This suggests the rebound has just started and hasn't yet reached overbought territory. There's still room to run in the short term. If the K line and D line form a golden cross at these low levels, that would further confirm the uptrend. First defense line, $187 to $188. This is the MA5 and MA10 convergence zone, the short-term trend lifeline. As long as price holds above this level, the bullish trend remains intact. Second defense line, $180, the midpoint of the long green candle's body, a reference point for the ladder's base. If price pulls back to here and holds, the first platform of the ladder structure will have solid footing. First ceiling, $200, the psychological round number level and the session high. This is both a psychological and technical resistance zone. Second ceiling, $210 to $220. If $200 is decisively broken, this becomes the next target zone. For the ladder up structure to officially confirm, we need three steps. Step 1. Pullbacks hold above the $185 to $188 zone. Step 2. A consolidation platform forms near $190 on shrinking volume. Step 3. A high volume breakout above the $200 round number level. Behind this 27% green candle sits solid fundamental support. First, global first. HBM4 mass production and delivery. On July 15th, SK Hynix officially began volume delivery of 12-layer HBM4 to NVIDIA, the world's first HBM4 product to complete full quality certification and enter mass production. destined for NVIDIA's next-generation AI computing platform, Vera Rubin. From wafer input in April to final delivery took just over 2 months, whereas the industry norm is typically 4 months. Industry estimates suggest SK Hynix is positioned to capture roughly 60% of NVIDIA's total HBM4 supply, with some projections as high as 70%. HBM4 delivers significant technical upgrades over previous generation HBM3E. Data channels double from 1024 to 2048, bandwidth doubles, and power efficiency improves by over 40%. Under typical AI workloads, overall compute performance can improve by as much as 69%. Second, the memory shortage will last for years. Barclays' global DRAM model shows bit supply growing 20% year over year in 2027, but bit demand accelerating to 35% growth. The supply crunch is set to persist for years. SK Hynix's entire 2026 HBM capacity has already been fully booked, with the shortage expected to extend into 2027. Third, broad institutional consensus. Of the 37 analysts covering SK Hynix, 36 have a buy or strong buy rating, with just one hold. UBS raised its target price to 3.2 million Korean won, projecting HBM's share of DRAM revenue to rise from 15% in 2026 to 58% by 2030. These fundamentals tell a clear story. SK Hynix's rally isn't pure sentiment. It's backed by real demand, real orders, and real technology leadership. The massive green candle establishes support around the $170 to $180 zone. Price oscillates between $185 and $200 in the coming days, forming the first platform. Moving averages, MA5/MA10/MA30, gradually move higher and converge. A high volume breakout above $200 triggers the next leg up. Subsequent pullbacks don't break the midpoint of the green candle's body, roughly $180 to $185. Platform consolidation comes on shrinking volume. The $200 breakout comes with expanding volume. The price may fluctuate in the short term around the current level, but the ladder up trend has already formed. SK Hynix is currently in the launch phase of a ladder up structure. Today's high volume green candle clearing all short-term moving averages, the KDJ approaching a low-level golden cross, the global first of HBM4 mass production, and broad institutional consensus. These signals together form a technical and fundamental convergence that marks the first step of the ladder. Now, here are 3 conditions to watch closely for any potential entry. Pullbacks hold above the $185 to $188 zone. A consolidation platform forms near $190 on shrinking volume. A high volume breakout above $200. The foundation of the ladder is being laid. The confirmation signal lies between the $200 breakout and the $188 defense. Good luck to all of us. Cut through the noise and see the real picture. If you're vibing with this content, smash that like button and subscribe. See you in the next one.